Hey, Bulls and Bears. This is my first report of 2024. Happy New Year to everyone. Please make sure you like and subscribe. We're going to explain what's going to be going on in 2024, the things to look out for. You're going to be ready for anything that's thrown at us this year in 2024. If you keep an eye on this channel, please hit the like button, get us a little bit of traction here. Please subscribe if you're not subscribed. Help this channel stay alive. Thank you very much. Blessings to all of you, and thank you for all the blessings that you bring me for continuing to come back to this channel and keeping us alive, here on this platform. All right. So 2024, what do I expect? Let's get right into it. Let's jump right into it. I expect more inflating of the markets, more money creation to keep markets propped up as much as possible. So we have this battle of inflationary forces, the money creation, all the money that's loaned out, so people can buy things that they normally could not afford to bid up prices higher. But then we've got deflationary forces. What's that? That's the amount of consumer debt, the amount of layoffs because of the slowdown in consumer demand. Just ask FedEx and UPS, both with very bearish outlooks on 2024 because of the drop off in demand. So when people look at the spending levels over the holidays that we saw just in the last couple months, the news was very optimistic, very positive. Look at all the spending. People are spending more. They must be rich, right? Well, really, people spent more. About the holiday spending was up a little over 3%, 3.1% versus 2022, about the rate of the official inflation number. Now, when you look at real inflation, you throw in housing and energy, it's a lot more than that, but just the official number, it's up about 3%, and that's about the rate of inflation. So are people wealthier, spending more money because they're better off financially? Well, no, people are spending more for the most part because everything still costs more. Inflation has not come down. The rate of inflation has come down, and it's very important to remember that the cost of living is still going up overall, but the rate of increase is slowing down. That's what they mean by inflation is slowing. It doesn't mean that things are actually getting easier for people. It's just getting more difficult. It's just getting more difficult at a slower pace. All right. So here's what's going to happen in 2024, in my opinion, and I'd like for you to chime in down below. First, let's go to this chart right here. We'll talk about the markets here, including the stock market first. Huge Santa rally at the end of 2023. We'll look at this chart beginning in November. Big uptick in the Dow Jones, the S&P, the NASDAQ. Huge uptick. So this is what I expect to continue in 2024. Investors pumping money into the markets. A lot of different ways that happens. That comes out of the money creation. Corporations buying their own stock, what's known as stock buybacks. And in many cases, corporations and companies borrowing money to then turn around and buy back their own stock with borrowed money. So you see all this corporate debt out there, and a lot of that's being used not for investing into the future of the company, but investing into the portfolios of some of the big high level people at these companies, like the CEOs and other upper level executives, and not investing that money into the workforce and giving pay raises. For the most part, not giving enough pay raises to keep up with the cost of living here and inflation, not just in the US, but globally. This is a phenomenon. All right. So I expect more market pumping in 2024. Now, here's the thing: when it comes to the big money, the investors, the whales, the billionaires, the hedge funds, etc., which make up about 90% of ownership of all stocks, the top 10% own about 90% of all stocks. It's going to take a big scare piece of news to outweigh the confidence that we have in the money printing that's done, out of the central bank, right? So the confidence is there right now that the markets are going to be propped up, with this money printing and the availability of taking on debt. We even see the talk of rate cuts in 2024. That's been some pretty big news here so far in December. So it's going to take a big scare news uh, item or news situation to outweigh the confidence that investors have in the markets right now. What do I mean by scare? Well, just think back to 2020 when the markets took a big dive after a global pandemic, global health crisis. Crazy, right? Will we see something that big on that big of a scale happen in 2024? It's going to take something big. Health crisis 2.0, World War III is on the verge. Some people say it's already started with all the conflicts that we're seeing right now. The U.S. is involved in these conflicts now, not just financially, but boots on the ground and strikes, etc. So it will take something big to bring the markets down because right now there's so much confidence out there that there's still going to be easy money, lower rates ahead, good times ahead, but then always be prepared for something big that's going to shake the confidence of the big money of the investors. And that's why I try to say, be balanced. You don't want to be all bearish and you don't want to be all bullish. You want to prepare for both scenarios. Have at least 30 days uh, cash, food, water, essentials out of the system. Be ready for the big scare news items to come out. Item or items, who knows? It could be a tsunami of bad things that happen. I'm hoping not. And people often say that I'm bearish because I say to prepare. Uh, I'm not bearish. I'm just saying prepare for that situation when it comes up. Because if you just look back at just the last couple decades, we see financial crisis, we see 2020. Before that was the dot-com bust. These things typically happen every 8 to 12 years, and 2020 happened, but it wasn't the deflationary event that normally throws markets back into reality or affordability. In fact, the opposite happened with all the propping up of the markets and with the money that was created to keep things inflated. We saw inflation instead of deflation, just the opposite of what we had witnessed in 2008 and back in 2001 after the dot-com bust. So could it happen? Well, it's going to be very, very interesting because any more inflationary forces like we had in 2020, all these programs to help people didn't have to make their payments, all the corporate welfare out there, we're really starting to risk the point of inflation getting so bad that it's going to really knock consumers off the road into the ditch because so many consumers right now are not doing so good financially, living on debt, living on borrowed money, living on borrowed time. And so we have to keep all these things in mind in 2024. I'm not predicting a crash. I'm just saying prepare for, the red alert to come out. The warning bells. And other than that, it's really important, I think, to be diversified. I know you've heard that a million times in the investment world. Be diversified. Be ready for anything because the world's getting crazier all the time, as we'll find out here in some of the next news items that I want to bring up here in this report today. Such as this report right here out of CNBC. How long $1 million in retirement will last in every state? It used to be not even too long ago, maybe 15 years ago, 10 years ago even. If you had $1 million, if you were a millionaire, people thought of you as, oh, someone that's just relaxing. You're chilling on the beach, right? You're chilling, you're relaxing, you're a millionaire. Life's stresses and struggles are behind you because you're a millionaire. That's the American dream. And now you don't have to work. You're, again, relaxing, but not now. Look at this. How long will $1 million last you? Well, it depends on your state, but here are some of the worst ones here. Let's go down to this list right here. Here's the map. The lighter the color, the faster your money will run out. The darker the color, the longer it'll last. So we see these states right here. We've got Oklahoma here, Kansas 22 years, Oklahoma 22 years. Some of these low-cost states, Mississippi 22 years, Alabama 22 years. Some of these states are not the best job markets, but if you already have $1 million and you move to one of those states, you'll be holding on to your money a lot longer. But here's the worst ones, the shortest ones. Hawaii, Massachusetts, California, New York, Alaska. Alaska used to be thought of as affordable. Okay, we're going to move out in the middle of nowhere. We're going to have to fight against bears just going to the outhouse to use the bathroom. So it's going to be cheaper out here to compensate us for all these risks that we're taking living off the grid and stuff like that. I mean, of course, Anchorage is pretty heavily connected, but a lot of Alaska, we have that type of setup where you're kind of living off of the grid, or you're on the grid, but you're off it in many ways when it comes to just basic necessities, plumbing, electricity. Um, wow, Maryland, Oregon, Vermont, Connecticut rounding out the top 10. New Hampshire actually rounding out the top 10 as the shortest amount of time that $1 million will last you. So when it comes to Hawaii, Massachusetts, California, in 13 years or less, even as a millionaire, you'll be running out of money. So that just shows you what the cost of living is right now and how inflation is really affecting things. Instead of having $1 million and being able to retire and relax, if you're in your 50s or 60s, you still might have to continue to work because your money is going to be gone in some of these states in a very short amount of time. I just thought that was pretty interesting. Out of PA Media, more big companies to collapse in 2024. And that should be no surprise. 2023 almost equaled the number of corporate bankruptcies that happened in 2020, and there was no health crisis. So, what does that tell you? We almost equaled the 2020 numbers with corporate bankruptcies. There was no health crisis. So, to me, I mean, that's pretty bad. If you have corporate bankruptcies that almost equal a year in 2020, in this case, in which there was a global, um, health scare, health event, health crisis. That's not good news, and this is not being really discussed that much on the big business news channels that I've seen, anyways. More big firms are likely to go bust next year amid the quote double whammy of high borrowing costs and pressure on consumer budgets, according to insolvency experts. That's Henry Saker Clark, PA Deputy Business Insider. So, yes, all these things converging, especially when you look at the consumer debt and the slowdown in demand for a lot of items. Look at the drop in electric vehicles, 30%. So, the slowdown in demand is real, and that could really weigh in on a lot of companies' bottom lines, and still being more difficult to borrow money at ultra low rates with the higher rates. Now, there's talks of rate cuts, but will the cuts be enough? And we still have the risk of overall cost of living and inflation, to where I don't think they're going to want to cut too aggressively unless something big, piece of news again, big scare, jumps out at the United States or at the world to bring things down. Wanted to talk about this. Here's kind of a sad snapshot of where we're at here. More than $44,000 worth of Legos stolen from sick children. And people sometimes say that I'm negative, that I'm doom and gloom. How can I be positive when they're stealing Legos from sick children? Tell me, how am I going to stay positive? I mean, stealing Legos from sick children. I'm just going to stop looking at the news. I'm just going to start watching sports all day and sitcoms. I'm not even going to look at this. And then I'll be able to bring you happy news. I'm going to say, oh, look at what happened. 49ers, beat this team, that team. I'm just going to start a sports channel so I'm not so negative. This is reality, folks. People are out there stealing money from sick children. I didn't want to read too much into this article. That's just a headline. That's at CNN, reported by Local 2 there. Let's see here. More CNN here. Someone could start the new year a millionaire as Powerball jackpot surges to $810 million. You're going to be rich. Go buy your ticket. What are your odds? Let's not talk about that. Let's talk about, we're going to be rich. We're going to win. Don't worry about the odds. I'm going to be more positive this year in 2024. You're going to be not just a millionaire, a multi-millionaire, because the Powerball jackpot's $810 million. How's that for optimism, folks? You are going to be hitting the jackpot this year. Out of SMH here, why were so many economists wrong about the recession? Well, that's because the big scare didn't happen in 2023. A lot of things are starting up. The threat of world war and wars breaking out across the globe. The U.S. is involved. Consumer debt getting to point of crisis levels. where you're starting to see the uptick in foreclosures, huge uptick in car repossessions. In fact, all-time highs now. Well, not repossessions yet. That hasn't hit all-time highs. But the number of people making late loan payments, that is now at all-time high levels. So unless some sort of intervention happens to where they prevent all these vehicles from being repossessed, the next thing you're going to see is a record number of vehicle repossessions. And that's when you really see the car market start to dive, when the repossessions start to take off. But will they just come out with some plan or some rescue to prevent that from happening? It's very likely. That's why I always say prepare for inflation too. When people still try to pigeonhole me as some bear predicting, doom or dire consequences, not at all. I'm predicting, more inflation, and they're going to try to keep these markets inflated. The powers that be, the ones running things right now, they don't want things to implode or collapse. I think they would rather see more inflation than deflation. That way they can say, oh, look at all the consumer spending, when really a lot of people are just taking on more debt to keep up with the high cost of everything pretty much, they have to buy, except for a couple areas where we're seeing deflation. Bank of America expects the U.S. central bank to cut funds by 100 basis points in 2024. What's 100 basis points? Well, it's about 1% on the Fed funds rate. So maybe from 5 something down to 4 something is what they predict. But why would Bank of America predict that if the economy is on strong footing? Why would we even need to talk about rate cuts? That's the question I always want people to ask yourself. If everything's fine, if everything's strong, the consumer's fine, these companies are strong, no problems, why are we talking about rate cuts? Let's raise rates more. So just that simple bit of data there, the fact that we're talking about rate cuts should really tell you what's really happening out there. Otherwise, we wouldn't need to be talking about these things. Bloomberg's out there with some very optimistic views here. U.S. consumer debt just returning to normal levels, according to Bernstein, who is an advisor to the current administration. Of course, he wants to make things sound as good as possible. Normal levels? Well, you be the judge of this. Let's take a look at a chart of U.S. debt here out of Statistica. And where is our chart? Here we go. Let's bring it up. And look to the far right here. As of the third quarter, the fourth quarter numbers are not out yet. They will be soon. But we don't need to go into the fourth quarter. Just look at the third quarter here, where my cursor is, to the right side of the screen. Now let's go back to 2007, 2008 financial crisis, just over 12 trillion. Now we're over 17 trillion. And when the fourth quarter numbers come out, we could be 17 and a half, 17.8, encroaching on 18 trillion. We'll see. But does this look like a normal level to you when you look at the financial crisis, rather, the GFC, and we're this much above back then? But yet, Bloomberg and the administration right now, they want you to believe that this is just back to normal levels. So it's insane, folks, the things that they're trying to put out there and expect us to believe. But, as always, we're going to stay on top of it here with economic reality and bulls and bears, no matter what side of the fence you're on. If you're a bull, if you're a bear, you're going to be on the right side of things, because we're going to look at all angles. We're not going to be just bullish. We're not going to be just bearish. We're going to be center focused, laser focused on getting through this, not just surviving, but thriving, right? So again, please make sure you subscribe and like, and we're going to come back with more economic reality as often as we can, hopefully every day. We'll see how, see the monkey wrenches that life throws at me here in 2024. I wish you all the best. I want to thank you again for being here, and we'll talk very soon. Keep stacking, everybody. Bye now. Peace.